Hello to everyone. Welcome to Microsoft Dynamics AX Forms Trade and Logistics Remote Training, Day 5. I'm Otrone Biga. I'm from Curiosity Ltd. My experience with product 6 years, specialization financial management, trade and logistics, projects, human resource management. Here you see my email. Things you need to know. You need to do your exercise, you need to study by yourself, mail questions to me before Friday at 12 p.m. Notice the time is GMT. Here you see my email. Agenda Day 5. On this day, we will cover Chapter 4, Customer and Vendor Trade Agreements, Chapter 5, Inventory Closing and Adjusting, Chapter 6, Inventory Journal. Chapter 5, Customer and Vendor Trade Agreements, Objectives. We have those objectives. Set up and activate customer and vendor trade agreements, discuss the price discount groups and the 4 types of vendor and customer trade agreements that are available in Microsoft Dynamics AX. Set up and use trade agreement parameters, create, copy or modify trade agreements through the use of trade agreement journals. Set up and use the supplementary items. Trade agreements basically can apply to a specific customer, to a vendor or an item, to groups of customers, groups of vendors, or groups of items, all customers, all vendors, or all items. To use trade agreements on purchase or sales orders, the combination of price agreements must be activated. Microsoft Dynamics AX4 contains control structures to activate these powerful pricing and discount structures. Activating trade agreements allows for each enterprise to activate relevant structures and deactivate those structures not relevant to the company's business processes. This feature provides more control for sales and purchase order processing. To access the Activate Price Discount form, select Account Receivable and Account Payable modules under folder Setup, and under folder Price Discount you can find the form Activate Price Discount. And you can see a lot of checkboxes in this form, in those forms, and selecting a checkbox allows for the different combinations of trade agreements. However, not all combinations are available for selection. So, price discount can only be activated for a specific item, not for item group and not for all items. Line discount can be activated for item discount groups or all items. Multi-line discount can be activated for item discount groups or all items. Total discount can only be activated for all items, not for one and not for any group. In Microsoft Dynamics AX form, 4 types of trade agreements can be created. So, in picture you see those 4 types. Price group, line discount groups, multi-line discount groups, total discount groups. Now talk about price groups. Price groups are used to specify the pricing of specific items to one a group of all customers and vendors. Line discount groups. Line discount groups allow you to specify a discount for a particular item, a group of items, or for all items to one a group or to all customers and vendors. Line discount is always applicable to the parent line. Multi-line discount groups allow you to specify a discount when one or more order lines meet the discount requirement. The multi-line discount calculates as an amount per price unit. Total discount groups are used to specify a discount for a specified total invoice amount on an order. The four trade agreements are created by using one of the following methods. Price discount groups are created from the accounts receivable, accounts payable, and the inventory management modules. And notice that discount groups are not the same as item group or customer or vendor group, which is used for posting settings, for ledger posting settings. Discount groups are different groups than usually item, custom, or vendor groups. So next method, directly from aligning the customer vendor items form, you can specify trade agreements, and you can specify trade agreements in a trade agreement journal. Now talk about price discount groups. Setting up trade agreements by using price discount groups are used to group customers, vendors, and items that you want to handle similarly regarding price or discount. So there are three groups: customer, vendor, and item discount groups. Customer discount group available for selection in the customer form on the sales order tab in the discount field group. And effects the customer highlighted will be part of the price discount group selected. Another available for selection system place is on the sales order header on the price discount tab in the discount miscellaneous charges field group. And effect the sales order highlighted will be part of the price discount group selected. Now talk about vendor discount group. In the vendor form, on the purchase order tab in the fields available in the discount field group. And effect the vendor highlighted will be part of the price discount group selected. Next available for selection place is on the purchase order header on the price discount tab in the discount miscellaneous charge field group, and affect individual purchase order highlighted will be part of the price discount group selected. Item discount group. Available in the item form on the price discount tab in the line and multi-line discount field in the purchase order and sales order field group. And affect the item highlighted will be part of the price discount group selected. So you can select discount group for individual sales or purchase order, and discount group settings will apply for individual sales or purchase order. Or you can apply this group to customer, vendor, or item, and this group will affect all sales and purchase order in which particular customer, vendor, item will be selected. Now let me show the exercise 4.1 and 4.2. I go to my Dynamics EX form. Exercise 4.1. Now I'm going to set up vendor trade agreement. I open accounts payable module, and I open the form vendor. locate vendor 3006 and click button Trade Agreement. So here you see that I can manually set purchase price, line discount, multi-line discount, total discount, and supplementary purchase item as well. Now I allocate purchase price, and I already have created purchase price for vendor. So you see that I can define purchase price by selecting specific currency, item, unit, validation date from date. This price will valid from this date, price. I can define quantity. For example, for 2 quantities, this price will be active. If I have 0, so it means that for all quantities, 1 or 2 or 3, this price is active. And I select checkbox Find Next. In the bottom line, you can see the field lead time, so I selected lead time. I created another line with item sale 100p and selected from date, which this price is valid from this date, and price and lead time as well. After that, create the purchase order. In the accounts payable module, open the form purchase order. So I already have this purchase order. Create a new purchase order, select vendor 3006, and in the line select item, sale 100B and sale 100C. So system update purchase price from the vendor table. And let me show customer trade agreement setup. This is the next exercise 4.2. Now I'm going to use item discount group in the inventory management module. So in the inventory management module under folder setup, open the folder price discount, and here you see all groups: item discount group, customer price discount group, vendor price discount group. Now I open item discount group. In the form header, you see fields for selection. So I can create group for line discount and for multi-line. Now I select line and create a new group line. This is unique code. This is description line discount for lamp. Select another discount, multi-line, and I created one additional line for multi-line discount group. So now I have multi-line discount group. After that, I assign those discount groups to items. In the inventory management module, open the form items and locate necessary items. So I have my item. On the tab price discount, here you see fields line discount and multi-line discount. In this field, I assign my multi-line discount group and line discount group. So I assigned for all other items on the same tab. Now let me show in the sales order. Next, my step is to set discount groups to customers. In the accounts receivable module, I open the form customers. So before creating sales order, I need to set discount groups for customers. I select customer 4004 and click button Trade Agreement. And here you see that I can define sales price, line discount, multi-line discount, and total discount. Now I select line discount and I assign my group, my item group, line discount. So here you see item discount group. Currency US dollars. Find next. And discount percentage 1. And I assign another discount group. So now let me show multi-line discount. Click button, Trade Agreement, and select multi-line discount. In this form, I assign multi-line discount. So here you see, create a new record. Then in the field item code, select group, and system for you shows multi-line discount, item multi-line discount group. And I select this group, quantity 50. So I define if a customer buys 50 quantity, I'm going to give for this customer discount percentage to that 50. So as you remember, we talked about discount parameters. In the accounts receivable module, let me show, in the accounts receivable module, under folder setup, open the form parameters, and on the tab prices, we have discount parameters. So here you see line, multi-line, max line, minimum line plus multi-line, and line times multi-line. So as you saw, I define line, discount group, and multi-line. So if in the parameters, if I select option line, only a line discount is applied to the sales order line or to the purchase order line. So my multi-line discount group will not work if I select option line, multi-line. If I select multi-line, only a multi-line discount is applied to the line. So in this case, line discount group will not be updated. Maximum line, multi-line. The system considers both the calculated line discount and the multi-line discount and applies only the better of the discount. So which is bigger? Minimum. The system considers both the calculated line discount and the multi-line discount and applies only the lesser of the discount. So again, multi-line or line. Line plus multi-line. The discount applied to the order line is the sum of both the line discount and multi-line discount. The two discounts are added and then the discount is calculated. So in this situation, system calculates line and multi-line and sums both of discounts. Line time multi-line. A discount applied to the order line is the value of the line discount added to the value of the multi-line discount. This is calculated based on the price minus the line discount. Notice the multi-line discount is calculated after the line discount has been deducted from the list price. So now I select line and multi-line because I'm going to sum both of discounts. And I create sales order. So this discount parameter affects line and multi-line discounts in sales order. I already have my sales order. I selected customer and I selected item, quantity 10, quantity 45. So first of all, system for me calculates automatically line discount, and after that I click button calculation, and here you see that if I have multi-line or total discount defined multi-line for total, it's necessary to calculate directly in the sales order. So now I select and I verify on the price discount tab. I don't see multi-line, okay, but I have multi-line. After that, I calculate multi-line discount. System based on parameter calculates discount, line discount plus multi-line discount. Now I go back to my presentation file. So we talked about the discount parameter, and the discount selection determines how discounts are handled for lines of a specific sales or purchase order. When both line and multi-line discount agreements apply to the sales order line. This is the only parameter setting that directly applies to customer and vendor trade agreements. So here's the discount parameter options. Line, multi-line, maximum line, multi-line, minimum, line plus multi-line, and line time multi-line. We discussed about this option earlier. So now talk about automatically price and discount adjustment. So you can adjust manually in the customer, vendor, or item table. You can adjust manually by creating discount groups and defining settings in the table, or you can adjust manually for the individual purchase and sales order. And additionally, you have trade agreement general functionality. And using this functionality, you can adjust automatically price and discount. So trade agreement journals are used to maintain trade agreements. New agreements can be created manually or by copying and modifying existing agreements. This helps, for example, if a new company is starting without agreement specified. It is possible from the trade agreement journal to enter all agreements in one area. Existing agreements can be retried and modified if a change in, for example, price or delivery date occurs. Also, in the case of a massive price increase, for example, existing agreements can be copied, price changed, and then used to keep historical transaction of prior prices. Trade agreements can be created and modified in a journal for later posting and update, if, for example, the journals must be approved before posting them. So, let me show trade agreement journal functionality in my Dynamics EX form. So I create trade agreement journal in the accounts receivable model, and I can create a trade agreement journal in the accounts payable model as well. But now let me show trade agreement journal in the accounts receivable model. So under folder setup, under folder price discount, here you see trade agreement journal name. So first of all, I create journal name. And after that, create a journal. In the account receivable module, open journal, open price discount, and here you see price discount agreement journal. So first of all, journal name, and after that, journal. So now let me show, simply create journal, click button line. So I can create manually lines. Here you see relations. Options available for purchase order. Price, purchase price, purchase line discount, purchase multi-line discount, purchase total discount, and for sales as well. Sales price, sales line discount, sales multi-line discount, and sales total discount. So first of all, I select relation. After that, I can select table, group, or all. I can select group. And here you see customer price group, So now I'm going to create for customer price group. If I select price, only option table is available. Item relation, I select item. I can define prices for configuration, for size, for color as well. And this depends on the mentioned group. If I have active options for price for the mentioned group. And here you see amount, price amount, currency. I can define specific currency. I can define validation date interval, quantity, days, price unit, price miscellaneous charge, discount percentage 1, discount percentage 2, which affects discount percentage 1. So simply create manually. So I can adjust existing agreements if in my open journal. Click button select. Okay. I create amount. Select button select, and I can adjust agreements in this particular channel. So I can select relation. From this relation to this relation I'm going to adjust. Date. From this date. Selection criteria. For example, inventory and all customers or group, and I can select for which customer group. So price group is different than typical customer group for ledger posting. If I want to modify all the selected agreements, I click button adjustment, and I can modify. So I have some options. Current, so means in this journal. Standard cost price, system searches for standard cost price in item. Default sales price, system searches for sales price in item table. 0. I can update all prices to 0, and I can assign percentage, current, percentage, amount, discount amount. So for current, I can update discount to 0. So discount percentage 1, discount percentage 2. In this way, I create adjustments for all lines for selected lines in my journal. In the journal lines form, from the list of retrieved agreements, I can select a single agreement as the basis for creating a new agreement. For example, I have this agreement, and now I want to copy. So I click copy, and select from which date to which date. So I'm going to copy relation from to date. I can change item code, item relation. I can change account code, so customer or vendor, in this case vendor, because purchase price, so I'm going to change for vendor. I can copy currency, or I can define another currency, and if you agree with those parameters, click button OK. After all changes go to the channel, and system updates all adjustments directly in the customer, vendor, and item tables. And adjustments from trade agreement channels override manual adjustments. And these adjustments appear in sales and purchase orders. Now I go back to my presentation file. Supplementary items. Supplementary sales items may be suggested for a single item number, a supplementary item group related to a supplementary customer group, or to all customers. For a specific customer who always wants a combination of items. Supplementary sales items are set up in the inventory management module, the accounts receivable module, and the accounts payable module. Supplementary items associated with individual items are set up from the item form under the trade agreement button. This type has one-to-one relationship between the item authored and a supplementary item authored. So the relationship is only one-to-one. Now let me show in my Dynamics AX supplementary item functionality. And we have exercise 4.4 supplementary items. I close all unnecessary windows. Now I'm going to show the exercise supplementary items 4.4. In the inventory management module, open the form item and locate item SP plug. Here it is. So supplementary items are defined under the same button Create Agreement, and you see supplementary sales items and supplementary purchase items. Now I select supplementary sales item. I created a line. So for item SP plug, for all customers, the relationship is from one item to all customers. I define supplementary quantity 1. Close the form. After that, in the inventory management, under folder setup, under folder supplementary items, open the form supplementary items item group. So I created a new item group, new supplementary item group. I click button supplementary items and supplementary sales items. So here I define that for all customers, supplementary item will be supplementary item and quantity 1. And I created another line, supplementary item, quantity 1. So here you see in the bottom of form that we have some options. I can define that this item is free of charge. Okay? I can define that this item is optional, or I can define that system controls using item on the one time or lots of times. After that, I define supplementary item groups to items. In the inventory management module, open the form items and locate items. Here I have all necessary items. On the tab Price Discount, there is a field in the sales order field group, supplementary item group. So I select supplementary item group for all necessary items. Now I go back to my presentation file. Customer and vendor trade agreements review. The covered trade agreements, sales price discounts, line price discounts, multi-line discounts, and total discounts. Trade agreements set up price discount groups, activating trade agreements, trade agreement parameters, purchasing agreements, and supplementary items. statistics, inventory closing and adjustment. We have those objectives. Identify why you use standard cost or a costing method in determining inventory value. Identify how to use standard cost price for items. Learn about estimated average cost in relation to item issued before inventory closing. Learn about the effects of using the include physical value parameter on item costing. Close inventory using the different inventory models available in Microsoft Dynamics AX4 and understand the effects on item costing. We have additional objectives. Learn about the effects of including an inventory dimension in the financial inventory and the effect this has on item costing. Perform a pre-inventory closing task. Perform an inventory closing, perform an inventory recalculation, perform manually inventory adjustments, run inventory costing and adjustment reports. The fundamental costing issue is that companies do not necessarily know the cost price of their items. When the items are sold, companies are frequently forced to operate with estimated and forecasted cost price if they have issues with items before the purchase order or production order, or the item is invoice posted or costed. The fundamental challenge regarding inventory costing and valuation is to design a strategy to deal with this uncertainty. There are generally two ways companies can handle this issue. They can either operate with a politically selected cost price standard cost, or other way, they can recalculate and adjust the used estimated cost price when they learn the actual price of the receipt. So they can use average cost price in the sales process. And after that, they can match sales with receipts and systems update issue cost prices. So now let me show in my Dynamics AX standard cost price. I close all unnecessary windows. Microsoft Dynamics AX4 enables the retention of a specified cost price as a cost value for an item when you want all transactions into and out of inventory to occur at a standard cost. This leads to a situation where the inventory closing is still necessary, but typically during the closing, no adjustments have to be posted, only the transaction will be closed. Using standard cost price makes it easier to understand the cost of transactions and increases the performance of mandatory inventory closing significantly. You can use standard cost by selecting the standard cost price checkbox in the inventory module group. So now let me show in the inventory management and the folder setup and the folder inventory. I open the form inventory model group and select model group both. And on the tab setup, you see the checkbox standard cost price, and this checkbox overrides inventory model selected in the field inventory model. So if item has the inventory model, this activates option standard cost price. They are excluded in the item closing and recalculation functionality process. When you select this box, the inventory model field is not considered cost price purposes until your standard cost price changes. So after that, let me show the item. And I have inventory model group with active standard cost price. In the form item, I select necessary item. On the tab price discount, in the cost field group, you see that I have a field price. So I've defined standard cost price in this field price. When you work with the standard cost price, any difference between the cost price and the current purchase price is posted in general ledger during the account setup in the relating item group for standard cost. Any difference is posted when updates are made in the accounts payable module, in the inventory journals, transfer journal, movement journals, and other inventory journals. Updates are made in the production module. So now let me show posting profile, posting settings. Ledger accounts used for posting difference is specified on the tab Purchase Order by selecting Standard Cost Profit and Standard Loss, and on the tab Inventory by selecting Standard Cost Profit and Standard Loss. If the cost price is changed, then inventory exists. All future transactions into and out of inventory occur at the new cost price. This means that an item that has been stocked at a certain cost price may be picked at a different cost price when the cost price fluctuates. If you do not want to use standard cost price, select an inventory model for the closing procedure and secure that the standard cost price field is cleared. In most countries, the inventory model is specified by law of the auditor. I go back to my presentation file. Now let me talk about average cost price and inventory closing and calculation models. Microsoft Dynamics AX4 always uses an average cost price to represent the value of inventory until inventory is closed regardless of which inventory model is set up. When an item is sold from inventory and the invoice is financially updated, it goes out of the inventory at the current average cost price. This is true for all costing methods, LIFO, FIFO, weighted average, and other inventory models, except for the standard cost method that was discussed a little bit earlier. So you see the average cost price formula. Average cost price is equal to total financial cost amount divided into total and divided into total posted quantity. The inventory dimension group determines for the item whether average cost price should be calculated for the whole on-hand inventory or the inventory dimension. Examples of this are warehouse. So system can calculate average cost price, and after that system can update this price based on warehouse, batch or serial number, size, color or configuration. Now let me show example of estimated average cost price. You see the table. So for example, on January 1st, one item is purchased for a cost price of $10 US. The on-hand inventory, so here you see on-hand inventory, level is 1 piece with a posted value of $10 US. Posted value is in the first line in the column post value. You see post value, and now cost price, average cost price is 10. On January 5, so here you see, one more item is purchased for a cost price of $20 US. Now the on-hand inventory level is 2 pieces. With a posted value of $30 US, so 10 plus 20, and an estimated average cost price of $16 US. On January 15, one more item is purchased for a cost price of $30 US. Now we have 3 quantities on hand with a posted value of $60 US, and average cost price is 20, so it means 60 divided to 3. On 3rd of January, you sell 1 piece, and have left 2 pieces on hand with a posted value of $40 US, an estimated average cost price of 20. Okay, you see 20. So if the item has been sold, between 5th and 14th January, it would have been fixed at a value of 15. Yes? On this value. The real inventory value must be calculated for ledger purposes. This value is found in relationship to a selected inventory model, FIFO, LIFO, and other inventory models that automatically matches receipts, costs, and issues. The matching calculation occurs only when the inventory is closed. So, average cost price may be calculated per inventory dimension. As I discussed earlier, the inventory dimension group specifies that one or more inventory dimensions are to be included in the financial inventory table. This means that all costing is based on this division. So we talk about option financial inventory in the dimension group, in the item dimension group. Note also the following 2 things with regard to dimensions and the financial inventory parameter. If we select an item dimension that is configuration, color, or size as active for the dimension group, financial inventory is always selected and cannot be cleared. If we select financial inventory for a dimension, physical inventory is also automatically selected. Now let me show floating value. So this floating value appears when we update parking slip without invoice. An item is often received via a parking slip update physically in inventory and date stamped. Before the purchase order is invoice updated financially in inventory and date stamped. The company does not know the item value when updating the parking slip, but expects the received goods to be a certain value. The value of received but non-invoiced items is now as a floating value. So the value of received but not invoiced. So if we have the value after parking slip updating, and this order is not invoiced yet, this value is now as a floating value. Now, let me show this value in my dynamic EX form. I close all unnecessary windows. In the form items, I locate necessary items. I click button on hand and select tab on hand to show all tabs. So in the field received, you see quantity updated with parking slip, and in the field physical cost amount, you see floating value. So system updates average cost for item quantity which is updated with parking slip. And here you see posted quantity. So now I have 100 quantity updated with invoice. So I have financial date and financial cost. And in the field financial cost amount, here you see, I have the cost amount, and this amount appears after invoice updating. So in the invoice updating process, system moves part of cost amount from physical cost amount field to financial cost amount field. And if I want to track floating value and to review floating value, I have to define options that me show in my inventory model group on the tab setup. You see, include physical value. So, include physical value and post physical inventory. So I need those two options, and as additionally I need a ledger account for posting. So now let me show on them. I click setup, button setup. I select menu line posting. And you see that for sales order, I define parking slip and parking slip offset ledger account. So this ledger account appears when my sales order is updated with parking slip. And for purchase order, you see parking slip and parking slip offset. So these options are necessary for floating value tracking. And I can review this floating value in several item reports, in inquiries and reports. So you can find additional examples of options include physical value using in your manual. Now I go back to my presentation file. In Microsoft Dynamics AX4, in addition to the standard cost price, there are the 5 different inventory models to recalculate the real inventory cost. FIFO, LIFO, LIFO date, weighted average date. And these models are set in the inventory model group. Now, let me talk about models using examples. Talk about FIFO. When using FIFO, item issues are balanced against the first item received in inventory based on the date of a physical inventory transaction. And talk about example. For example, in April 3rd, a purchase order for an item with a purchase price of $10 is received and bought. Both the packing slip and invoice are updated. On April 7th, here you see, a purchase order for yet one more piece of an item for $20 is received and bought. On April 10th, here you see, a sales order is created for one piece of the item. The order is delivered and sold. From the sales order line, you now check the cost information for the transaction. So, because Microsoft Dynamics AX4 calculates the cost price immediately for every posting, made the sales order was deducted at a price of $15. On April 12th, so here's April 12th, a further purchase for the item for $30 is received and bought. Before you perform inventory closing, 2 items are on hand and an average cost price of is $22.50. After you have run inventory closing, you can see a change in the cost price to $10 based on the first item received. So system compares sales order with first purchase order and updates cost price to $10. LIFO. To use LIFO or LIFO date as your costing method for an item, when inventory is closed, set the inventory model up in the inventory model group and attach this group to the item. When using LIFO, item issues are balanced against the last item received in inventory base on the physical date of the last inventory transaction. So here you see. It is important to say that the LIFO in Microsoft Dynamics AX is described as last issue. It settles against the last receipt, as shown below. So we see this sales order and this purchase order. Sales order, purchase order, this sales order, this purchase order. Microsoft Dynamics AX4 offers 2 types of LIFO models. LIFO, item issues are always balanced against the item received last in inventory. based on the physical date of the inventory transaction and LIFO date. Item issues are settled against the item received last in the inventory, based on the date of the inventory transaction. If there is no item received before the item issue, the issue is settled against any receipt that occur after the date of the item issue. Now let me show example for LIFO and LIFO date. So here you see LIFO. On April 3rd, here you see, the purchase order for one item for $10 is received and both parking slip and invoice updated. On April 7th, a purchase order for yet one more item of $20 is received and is both parking slip and invoice updated. On April 10th, here you see, a sales order for one piece of the item was sold. It was also parking slip and invoice updated. On April 12th, a further purchase for one item of $30 is received and is both parking slip and invoice updated. So before closing completely, two items on hand, an average cost price of each is $15. After you have performed inventory closing, the cost price is updated to $30. Here you see, because the cost is based on the cost of the last received item. Our last received item was purchase order on the 12th of April. The inventory model LIFO settles the sales order against the last purchase order, and cost price is $30. The first and second items are still on hand for a cost price of $15. It means one quantity times to $10 and another quantity is times to 20. Now you see LIFO date. If you run the same scenario with an item that has an inventory model of the type LIFO date, the settlement works indifferently. In this situation, the issue is settled against the first financial updated receipt before the issue date. If you use an item with the inventory model LIFO date in the previous example for LIFO date, the sales order is settled against the purchase order of April 7th. So we have sales order, and if you use LIFO date, the sales order is settled against purchase order on 7th April. And the cost will be $20. The remaining on hand of two items is costed of $20 per piece. So it means 1 times 10 plus 1 times 30 and divide into 2. Weighted average. To use weighted average as your costing method for an item when inventory is closed, set within the inventory model group and a purchase group to the item. When using weighted average, item issues are valued at an average value based on the items that make up the inventory value at the time of the item issue. An item issue is balanced proportionally against item received. users can decide on the minimum quantity to be balanced against. So users define minimum quantity in the inventory management module under folder setup in the form parameters. Under tab general, there is a field minimum average quantity, and this quantity affects the weighted average model group. And additionally, user can directly in the item table to define minimum average quantity on the other tab. And this quantity overrides quantity selected in the parameters. Now talk about weighted average model group. So we have the example: a purchase receipt is made on January 10. So we have a purchase on 10th of January. And we have two pieces at $10 each. Another purchase order is created, but is not received on January 15th for two pieces of $12. An issue occurs on January 10th, sales order. Weighted average only examines the average of that is on hand and received, which are not financially received yet, are not considered. So the average price would be $10 for the issue. On January 18th, we have another additional transaction. The 6 pieces of the item are received at the cost $12 per each. The inventory closing call receipts that have not been financially updated are now updated. When you perform inventory closing, in the minimum settle amount field specify 1. Minimum settle amount field specify 1. After inventory closing, you can see how the issue is settled in the following picture. In this picture, you can see that issue is settled and cost is updated to 11.60. So in your manual, you can find the formula how the system updates cost price to 11.60. Let me show another slide. Weighted average minimum average quantity L.50. Say purchase order has been received for respectively one piece of $10, $20, and 30. So you see 3 purchase orders. 1, 2, and 3. And the value in the minimum average quantity was set to 0.50. This means that no less than half a piece can be settled. This will result in a settlement of 0.50 of the 2 first purchase orders at a cost of $15. So it means 0.50 times $10 plus 0.50 times to $20. And now we have $15. This picture gives a brief graphical overview of the different inventory models. So you see in this picture LIFO, FIFO, LIFO date, weighted average date. use the financial inventory parameter on inventory dimension to calculate the cost price on groups of transactions for a specific dimension within the inventory dimension group. So in the inventory dimension group, we have option financial inventory, and we can use this option. So if we use, instead of performing the price calculation on one large group of transactions and differentiated by the specific dimension, the calculation is performed only between transactions with the same dimension identification. To perform calculation for the specific dimension, you must select the financial inventory parameter for the dimension, and you need to select this parameter in the item dimension group and assign this group to the item. So here you see the example with batch dimension. And in this example, batch number does not have the financial inventory parameter selected. So you see talk about example, on January 10th, you received a purchase order. A purchase order with 100 quantity of an item at $1 each. The receipt has batch number GTM 001 attached to it and is received at warehouse MW. The purchase order is invoiced on January 15th. You received a purchase order of 100 quantities of the same item at the price of $2 per piece. The receipt has a batch number GTM 002 attached to it and is received at warehouse MW. The purchase order is invoiced on January 16th. You see January 16th, you deliver an invoice update sales order for 100 pieces of a batch number GTM 002 item. The inventory model used for the item is weighted average, and when you perform the inventory closing, the whole quantity of 200 pieces is considered for the calculation. Inventory closing settles the issue partly against both receipts, because you received and invoiced two purchase orders. 50 pieces from each order are settled, and this results in a cost of let me show $1.50 per piece. So we have another situation. In this situation, the batch number dimension is selected as financial inventory, and after you have performed inventory closing, the issues are only settled against the purchase order with batch number GTM 002 attached to it. So in this example, batch number dimension has the financial inventory parameter selected, and this means that issue has a cost of $2 per piece. Now let me show 3 closing actions in my Dynamics EX form. Now talk about item closing and recalculation and adjustment. So we have 2 pre-closing actions, to check open quantities and to check cost price. So let's do those actions. In the inventory management module, under folder periodics, open the form closing and adjustments. And you see the button Close Procedure. You see functions, check Open Quantities, check Cost Price, and Close. So now I'm going to proceed pre-closing action, check Open Quantities, and after that check Cost Price. Let me show check Open Quantities. I'm going to check until this day. So I have expected closing date. And I'm going to review receipts as well. Okay. The report calculates. So here you see. The report calculates the open quantity at a specified date. This is done per financial dimension for the selected items. Items with a negative open quantity for financial dimension are printed. So you see, negative quantity. This quantity is open. This indicates that more issues have been performed than there are financial updated receipts to cover the issue until the specified date. Any subsequent closing will therefore not adjust all issues to the correct cost price, as not all receipts have been financially updated. For some companies, it is vital that all cost prices are adjusted according to the model after a unitary closing. In those cases, the report should be entered as the expected closing date. So now I have some open quantities. I check these quantities, and I have to make some decisions what to do with those purchase orders. The report takes marked transactions into account as well. If the sum of the marked open receipt and issued transaction does not match, it shows in the report output with the specification marked transaction. So you see marked transaction. So it means that open receipt and issue transaction does not match. Marked. And for this line, you see that purchase order number is only physically updated, and if an inventory closing is executed today, the related issue transaction will not be closed. So updated only for dimension warehouse GW. Next, my action. I proceed with action under the same button. Check cost price. I'm going to check my price for the same expected closing date. And here you see I have some options. Ignore production order. You can select this option, and the cost price received from production orders are ignored when running the report. Why I'm going to ignore. Maximum percentage deviation. In this field, specify the percentage that the cost price of a transaction is allowed to deviate from a base cost price, which is specified in the basic cost price. Let me show basic cost price field. The basic cost price settings are as follows. Item cost price. So cost price taken from item table. So it means standard cost price. item or median cost price. If there is no cost price in the item form for the item, the median cost price is used and median. So now I select item or median. This maximum percentage deviation, for example 50, and minimum deviation, for example 10. And click button OK. You see, I can review cost price deviation. We see that median font system generates for me median 0, cost price 529, and error cost, the deviation exceeds the limit of 50. The deviation exceeds the limit of 50. So I check those cost price, and after that I make decisions before closing my inventory. Now, if I want to close my inventory, I select, I click button Close Procedure and select Menu Line Close. And you see that in this function, I close inventory for all items. So if I'm going to close, I close all items, and it means that I'm not able to record any issue and receive transactions before closing date, only after. So here you see dialog box, close inventory up to. So this is up to which day I'm going to close. Specification. You see total, item group, and item number. In which field specify the level within the general ledger for which you want to create a ledger process. If you select item number, with selecting the most detailed gives a single transaction for each item number adjustment made by inventory closing. Update production. Select this option to update posting for production orders with corrections. Adjustments are posted on production. Update ledger. Select update ledger to update the general ledger with these postings. So you can fill notes for information, maximum throughput, minimum throughput adjustments. In the maximum throughput field, specify the maximum number of throughput, which is the number of permitted loops. A throughput involves going through all items one time, starting with the lowest ID. In the second throughput, corrections on the first throughput are made to the next level. And this is minimum. So you can specify minimum settled quantity percent and minimum settled amount. You can find examples of those using options in your manual. Run recalculation after posting. So you can choose to automatically run recalculations data to date to obtain the actual inventory values calculated for the current period up until today. Typically, you close the inventory minimum 1 month behind to also close your relating ledger period. So you can select this option to ask system to recalculate items before closing. In this form, you can see records. Now let me show all records. Date. So this is date for which the action is posted. Voucher. Type. This is type posting. So the record gains this type, then user manually adjusts directly in the transaction, in the inventory transaction cost type. Executed date when this action was executed. So here's the cancellation. One action was cancelled. So you can cancel recalculation. Notice that you cannot cancel closing. Activate, active. So it means that this action is active. Active action. In this form, you see other functions, recalculation. So you can recalculate your inventory. Before inventory closing in Microsoft Dynamics X4, you can perform a process which recalculates the inventory cost price as of a given date. A recalculation is similar to running an inventory closing in Microsoft Dynamics X4, but there is some important difference. The recalculated inventory transaction will not be closed as happens when you perform inventory closing. And you can run a recalculation on specific item, item group, or warehouse. So you can run on selected item or item group, and you can run closing only on all items. So there is a dialog box. In the field recalculate inventory up to select the date up to which you are going to recalculate. Select specification for ledger transactions. Update reduction. This is the same as for closing. Update ledger. Note. And you see the same advanced and weighted average option. So this option for weighted average. And this is for all items. So after recalculation, you can review settlements, see different reduction lines, principal markings, inventory transactions, you can review detailed transactions. On the tab Ledger, you can review posting type, ledger counts, which were used for ledger transactions. You can review voucher. So we can review transactions. And this transaction was adjusted. If you want to adjust manual, select button Adjustment, and there are two adjustment types, on hand and transaction. So you can use on hand if you have at least one closing, one record with type closing. On-hand inventories can only be adjusted once you have closed the inventory, as the adjustment is performed on on-hand inventory of a known value. If you did on-hand inventory, the previous closer cannot be cancelled until the adjustment is cancelled. Both cancellations are performed by clicking the Cancel button in the Close and Adjustment form. and transactions. So you can perform adjustments, manual adjustments on transactions. If you have not closed inventory, you may only make adjustments of transactions with receipt status of purchase. Now let me show. So system for you shows purchase transaction. So you can adjust purchase transaction. Receipt price. Adjustment of transaction with a receipt status of purchase may be executed without prior closing. If you perform an adjustment of one or more transactions, the item's inventory value will only be calculated following a recalculation. So you select the adjustment amount in the field Edit Now, and after that, click Post. You can do those adjustments: item cost price, fixed cost price, amount, value, and percent. After posting, you can print adjustment journal. Now I go back to my presentation file. Inventory closing and adjusting. We covered fundamental costing issue, standard cost price, average cost price, floating value, and include physical value parameters, inventory models, financial inventory, and closing. We covered pre-closing tasks, performing an inventory closing, performing an inventory recalculation, performing manual adjustments, inventory costing, and adjusting reports. Chapter 6, we have those objectives. Create journal names for inventory journals, set up dimension group for journals, create and process an inventory movement journal, create and process a profit and loss journal, create and process a transfer journal, create and process a bill of material journal, set up warehouse items and counting groups, create and process a counting journal, create and process a tax counting journal. Inventory journals are used for posting physical and financial inventory transactions, including posting issues and receipts, inventory movements, creating bills of material, and reconciliation of physical inventory. So, here you see the inventory journal's main types are these. Movement journal can be used to change prices and to bring in opening inventory balances during system setup, and also these adjustments to specific ledger accounts. Profit loss journal is generally used to write off inventory or make standard adjustments. Transfer journal allow you to move or transfer an item within an inventory and storage dimension. Bill of material journal allow to generate an inventory receipt of a BOM item and an inventory issue of an item constituting the BOM. Counting journal lets you calculate the current on-hand inventory level already recorded in system. So first of all, it's necessary to create journal name. And we create journal names in the inventory management module under setup under journal name inventory. In the same inventory management module, in the parameters, we assign journals channel names for default users in the system. As with other types of received and issued transaction, you must specify the inventory dimension for any transaction made in a general line. I mean that in the item dimension group, on the tab Editing, we specify the inventory dimension for any transaction made in a general line. So we have, before using channels, necessary to do those 3 steps: define general name in inventory management parameters, and define in the item dimension group in which system place activated dimension will be editing. Now let me show profit and loss channel posting. Transactions can be generated for inventory profits and losses when recording transaction in the inventory, for example, in a profit-loss journal. For inventory profits, the receipts account is debited and the account for inventory gains is credited. So here you see that the system uses ledger account from item posting settings. And this is the biggest difference between profit loss and movement journal. So in general, both journals enable you to enter journal lines where items are issued from inventory. So I talk about profit, loss, and movement journals. When you post the journals and inventory receipt or issues is posted, the inventory level and value are changed and ledger transactions are generated. Now let me show in my Dynamics AX inventory journal. Inventory journal and main steps for inventory journals using. So first of all, necessary to create a journal name in the inventory management module under folder setup and the folder journals. Here you see journal name, and create a journal name for journal type, movement, profit, loss, transfer. So for those journal types which you are going to use. Next step, to define default journal name in the inventory management module and the folder setup in the form parameters. On the tab journal, I define default journal name. Next step, the item dimension group, let me show, in the inventory management module under folder setup, under folder dimensions, I open the form dimension group. And here you see, if I activate dimensions on the tab editing, I define in which orders in a journal this particular dimension will be edited. So I will be able to assign this dimension or to change. And you see that I do this action. By default, all checkboxes are selected. So I need to deselect. After those steps, in the inventory management module, open the folder channels and line, open item transactions and item counter, and here you see the main inventory channel. You see movement. Let me show. In the movement, you can define date, item number, inventory, and storage dimensions. So, negative quantity. If you select negative quantity, system will update issue transaction. If you select positive quantity, system updates receive transaction. You define cost amount, you define cost price, and system calculates cost amount, and you define a ledger account. So actually, if you are going to record receipt transaction, so quantity positive, you define cost price, receipt cost price. If you are going to record issue transaction, negative, you do not necessary to define cost price in case system uses standard cost price or average cost price. So next channel is profit and loss. Let me show. I click line. In this channel, you can record issue and receive transaction as well, but you have no possibility to select a ledger account. System updates issue or receive transaction using ledger account from the item posting. Let me show. Posting. On the tab inventory, see issue and loss. So system uses those ledger accounts for item, journal, profit and loss. Transfer channels let you move or transfer an item within an inventory dimension. When you post this kind of channel, two inventory transactions are created for each channel line, an inventory receipt and an inventory issue. Now let me show. So this is date, item number, and you can move from one inventory and storage dimension to another, from size to size, from warehouse to warehouse, from batch to batch, and you assign quantity, negative quantity. Now next, bill of materials. Posting a bill of material generates an inventory receipt of the BOM item and an inventory issue of the items constituting the BOM. The BOM channel is used by companies who have a very simple high volume production process. The production routes are not specified. Moreover, items that are reported as finished in this manner probably have a high material cost related to labor cost. Now let me show. So basically, you create this channel. After that, click button BOM and click report as finished. So you select item beside BOM and system updates this BOM with component item from the BOM line. So now let me show posted. Here you see, first line is BOM quantity positive. So system generates a receipt transaction, and this is component. Quantity is negative, system generates issue transaction for those items. And system updates cost price, automatically cost price, standard or average. So it depends on item settings, you can change quantity. Next channel is counting channel. The counting channel lets you calculate the current on-hand inventory level recorded in Microsoft Dynamics AS form for a group of items, and then post the actual physical count to make the adjustment necessary to reconcile their difference. So basically you record a new channel, click button lines, and here you see, let me delete this line. So here you see that you can create on-hand items and expired batches. So before that, let me talk about counting groups. Counting groups enable you to create logical grouping of items, depending on how you want to count the items. Typically, logical groups are based on item value, warehouse section, ATP code, inventory turnover, and similar factors. So now, let me show counting group. You create counting group in the inventory management under folder setup, under folder inventory. Okay, it is counting group. So basically, create a new record, and on the tab General, you see counting codes. And there are 4 codes: manual, period, zero in stock, and minimum. Now talk about manual. So if I select manual, the item is included every time the job is done. In other words, you decide the counting interval for the counting group by initiating the count job. Period. Specify the number of days that make up the period in the period field. So if I select period, in this field, I select number of days. And based on this period, item which has counting group, will be updated in the counting journal. Zero in stock. If on-hand inventory is equal to 0 for an item in this counting group, it will be included in the counting batch job. If the on-hand inventory reaches 0 after count, the item will be included the next time you initiate the count. Minimum. The items in this counting group are included in a counting batch job if the items on hand quantity is equal to or falls under the quantity specified in the refile limit field of the warehouse item. Counting groups. After that, you assign counting groups, let me show, to items. There is a field, counting group. And after creating counting groups, so counting group is not mandatory but optional. After that, create a counting journal and click button create. So here you see on hand items and expired batch. On hand Selecting this creates a general listing only those items for which on-hand inventory is registered. That is, on-hand inventory is not equal to 0. Let me show. So here you select counting date, for which date you're going to count, maximum number of lines. You can select physical transactions, and it means that if you select this option, system only includes items for which there have been physical transactions since the last count. Not counting since. The system will include the items that have not been counted since the specified date. You can select counting group, and the system will count only those items which are related to a particular group, and will count based on counting group rules. Activate counting code. So this checkbox is related with counting group. Include items with nothing on hand. Available only when you create lines with method on hand. General lines for items with no stock on hand will be included. For example, for a specific counting group, a separate channel for all items with nothing on hand can be generated for special verification. And you can select dimensions if you want to count details on dimensions. Next function is items. So here you see the same counting date, field, maximum number of lines, physical transaction, option, so you can select not count and since, counting group, and warehouse. So basically, you can use this function if you are going to count for every warehouse or for one warehouse. Date expired batches. Selecting this creates a journal listing only those items with an expired batch date. This enables warehouse staff to count only those items with expired batches, so that these items can be removed from inventory or otherwise treated in a special manner. So this is for batches. Next journal is tag counting. Tag counting is a method that simplifies manual inventory counting. Tag counting can be used in addition to ordinary counting, where automatic counting lines are generated, or it can be used instead of ordinary counting. A tag count is a method for counting all items in a location. When a tag count is performed, all items are physically tagged and counted 2 times by location. Typically, a tag count occurs at the end of a year or any frequency scheduled by a company. 2 teams independently perform the same physical inventory and record their data on 2 different parts of the tag. Later, each team's data is used to compare results and resolve variances. Many businesses use a tag count, the tag counting journal, together with cycle count, the counting journal, to make sure of inventory accuracy. The idea of a tag count is to tag count a lot with a number of tags. The following information should be registered on the tag. Tag number, let me show. Tag number, item number, item quantity. So, and you see status. Each item number has its own stack of tags with its own number sequence to make sure that stack is only used one time and that all tags are used. The first tag can have one of these status values: used, avoided, missing. Used item number counted for this tag, voided item number voided for this tag, missing item number missing for this tag. So here you see a tag counting journal. Now I go back to my presentation file. Inventory journal review. We covered creating journal name and setting as default journal name, dimension group setup for journals, setting up posting for inventory journals, creating and processing of movement journals, profit and loss journals, transfer journals, bills of material journals. We covered setup for counting journals, creating and processing counting journals, creating and processing tax counting journals. Summary Day 5. We covered Chapter 4, Customer and Vendor Trade Agreements. We covered Chapter 5, Inventory Closing and Adjusting. We covered Chapter 6, Inventory Journals. Next time, we will cover Chapter 7, Transfer Orders, Chapter 8, Commission, and Theory of Bond, Bill of Material. We will cover the main process, the main settings for Bill of Material. I expect you to review manual and exercise regarding the successive agenda. Here are things you need to know. You need to do your exercise, you need to study by yourself. I'll read your questions before Friday at 12 p.m. Notice time is GMT, and here you see my email. Now, let me say thank you for your time. Thank you for your attention. See you next time. Have a good day. Bye-bye.
Thank you, Audron. I'd like to thank you for your attendance to this live meeting, and I'd like to welcome you to next week's introduction session, week 6. You will receive the login details of this live meeting by the end of the day. Thank you, and have a nice day.